Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Hello and happy Halloween. Today, I wanted to cover what I think are some of the scariest stocks in the market. So everything you are about to hear is all bad. Cover your ears, hit the like and subscribe button because it's about to go down, okay? And you're going to see exactly what I mean by down. All right, so what I did was pull together mostly companies in the S&P 500, a lot of popular stocks, and give you the state of affairs for where they are right now. Now, the market is not closed at the time I'm recording this video, so the numbers could be slightly off depending on when you're watching the video and what the market closes at, but the market's going to close here pretty soon anyway. All right, so let's go ahead and get into it. The first company I have here is Intel, INTC. They are down about 34% in the last 6 months and down 40% over the last year. Now, many chip makers, let's say NVIDIA included, have not done well. I would honestly say that is average for this list. So, y'all, I am not happy about taking the 34% loss. I don't own Intel, but compared to everything else, that might be the best one on the list here. So let's continue. Next one is Digital Realty Trust. That is DLR. It's a REIT. We talked about REITs, and remember, if you go back to that video, I said be careful about which REIT you own. Okay, because in theory, yes, REITs, real estate investment trust, real estate tends to do well in recessions, tends to do well in a rising interest rate market, all that stuff, but not all of them have done well. DLR is down 30% in the last 6 months and down 34% over the last year. The next one here is Expedia. That is EXPE. Now, this one's kind of weird. They're down 45% in the last year and down 45% in the last 6 months and then 42% over the last year. Now, despite this performance, the CEO of the company last year was one of the highest paid CEOs across the board. And we're talking about by a mile, even though last year, yeah, it performs a little shaky there too. But hey, those checks cash, so I guess he is fine here. Now, interestingly enough, this was one of my favorite or better stocks way back in 2020 because travel stocks did start to pick up at the latter part of 2020, especially going in 2021. Obviously, we didn't talk about it much because I didn't believe in it that much, and you kind of see why. We kind of left that one off the list, a lot of lists, because of what you see here. But Expedia, not doing so great. Next one on here is the big one, which I'm sure you all know is Meta. They're down 53% in the last 6 months and about 70% over the last year. This used to be one of the top 5 most valuable companies. It is not even in the top 20 anymore, depending on what it is today, but it's definitely fallen off a cliff. Also, if you go back to the time they changed their name from Facebook to Meta, the company has lost $650 billion with a B in company value. It has been rough for Meta, and I don't know when and if things are going to change. I will say, on the bright side, remember when we used to talk about Netflix and how bad Netflix was? Did you know that Netflix is actually up about 50% in the last 6 months? I'm just throwing it out there. So I might be getting rid of Meta. We'll see come December, but there's hope. There is hope that things can bounce back. I may not be as confident in that hope, but if Netflix can do it, why can't Meta? We'll see. All right, next one on the list is Royal Caribbean Cruise Lines. That is RCL. They're down 31% in the last 6 months, 36% over the last year. I think the cruise line thing, that phase is kind of fizzled out. A lot of people were really into cruise lines in 2020 and 2021. I was never really on that boat, pun intended there, but the company just hasn't done well. If you really go back and say, you go to Yahoo Finance and say 2016 to 2019, or even go all the way back to 2000 to 2019, if you want to take a broader view, cruise lines have almost never done all that well. So I've never really been a fan of them long term, and especially now for obvious reasons. Next one here hits me a little personally. That's Stanley Black & Decker, SWK. I love this stock back in 2020. I liked it more, or I liked it some in 2021, and while I don't own it now, it was great for when I had it, but I don't know, SWK is down 33% in the last 6 months, down 55% over the last year, and they are the tool company. They make power drills and all that kind of stuff, basically the things you need to hang shelves, build bookshelves, all those types of things. That was really popular in 2020 when people were buying more home goods, buying more furniture, putting more things in their home, and just really investing in their home. when you really couldn't get outside of the house. So it made a whole lot of sense back then. Apparently it makes a whole lot less sense now. So just interesting, and I feel sad for it. Again, I don't own it anymore. I told y'all when I got in, told y'all when I got out. Things have obviously slowed down for the company. It just, it just makes me sad. I feel like it was a solid company, and it should remain solid, and that is not the case. And as this list goes on, it continues to get more personal and sad for me, because the next one on here is Signature Bank. That is SBNY. They're a regional bank, primarily in the Northeast. And I did an entire breakdown for my cram session early in January, one of my favorite stocks at that point in time. And right now it is down 34% in the last 6 months, down 46% over the last year. And I'm upset because I believed in them. I was rooting for them. And now they are a zombie, a ghost floating in, I don't know, a stock market graveyard watch list somewhere, which I guess is what this is. But aside from all of that, so in my defense, right, in all of our defenses, this was back in January. We only had the information we had back in January. We knew interest rates were going up. Myself and everybody else, we all knew rising interest rates equals good things for the banks. What we did not expect is recession, which is not good for the banks. Higher inflation that does not seem to stop is not great for the banks. War in Ukraine, not great for the banks. Higher oil prices, not good for anybody. Those are things that were not on the bingo card. They were. We would have avoided the banks from the very beginning. However, the good thing here is that's why we follow the 5% rule. You don't put any more than 5% in one single stock. You put as much as you want inside of an index fund, but in any one individual stock or crypto, if you want to add that too, you don't put more than 5%. Also, is why we adjust our portfolio. Okay, this is why. Because in a situation like this, something unexpected came up. We can make a change. Say, hey, look, this is where the world is now. Let's make some adjustments, as opposed to using what we learned in 2021 and just allowing that to ride for the entire year. Not always the best thing in the world, as we can see from Signature Bank. All right, next is BBWI. Now, I'm going to tell you the name of this company, but I always get tongue twisted and confuse the names here. This is Bath and Body Works. Okay, Bath and Body Works. Now, if you're a long-time subscriber to the channel, then you know why I'm saying it so carefully, because I always get confused with the other company, which is Bed Bath & Beyond. Okay, this is Bath and Body Works. This company is down 34% in the last 6 months, and then 46% over the last year. Hadn't gone well for them. I still have some gift cards from my wedding in 2017 that I have not used. That I probably should, but it's not going well for them. And they've kind of gotten caught up in the meme phase from time to time, and also confused with Bed Bath & Beyond. But anyway, Bath and Body Works. Bath and Body Works just hasn't done well, obviously, for a little bit of time now. And let me quote this correctly. Down 34% in the last 6 months, down 51% over the last year. All right, last one here. This one is, this is the worst one on the list so far. Snapchat. Snapchat's down 64% in the last 6 months. Snapchat is also down 80%, 80% over the last year. If you got a $10,000 stock bonus from Snapchat, like, oh my God, I've worked here for so long, here's extra $10,000 in shares, you got about $200 today. That is not good at all. And in fact, this is why I always say, even if you work at a company and you get equity shares, this happens a lot at places like Snapchat and Meta and Google and Apple. I even spoke at Google last week to kind of talk about this as well, in that you want to cap the amount of money that you have in some of your own company stock. For some people, I would say for the average person, you want to cap it anywhere between 10 to 15% if you really, really believe in the company. Because imagine you're 2 years from retirement and 90% of your money is in something like Snapchat. Not something you would expect. If you asked me in 2021, do I think Snapchat would be down 80% in a year? No. Not that much. And I never really even believed in Snapchat to begin with. But 8%, that's scary. That's a lot. This is why you want to follow the 5% rule if you're a regular investor. And if you work at some of these companies, 10 to 15% is as high as you want to go. Anything else, it usually makes sense to sell and invest in something more diversified like an index fund to kind of shake things out and even things out, because what you don't want to do, again, is run the risk of having all of your retirement, all of your financial freedom tied up in one asset that may have done well years ago, right? If you were investing in, you worked at Apple and you had a bunch of shares in Apple or Google or Microsoft or Tesla, all that stuff worked then. But in some years like this, it may not work so well, and it can really, really stress you out. And I'm not gonna lie, if I was down 80%, I would be stressed out too. Okay, so that is the scariest list of in the stock market so far. I'll run down the list here real quick. Meta, Intel, Digital Realty Trust, DLR, Expedia, Royal Caribbean Cruise, Stanley Black & Decker, Signature Bank, Bath and Body Works, and Snapchat. So there's 9. Maybe I should have rounded it out and did 10, but we got 9 today. Maybe 9 is a scarier number than 10, I feel like. All right, so happy Halloween. Go have fun, eat candy, do all those things, be safe. Last thing, make sure you check out the members only. Also, I'm telling people to be safe on holiday. Y'all trick-or-treating? Y'all, I feel like we're all adults here. Now, I've got 2 kids, 2 and 4, so I will be out there with them. So we'll all be safe and all that kind of stuff, but I don't know if any of y'all trick-or-treat and are going out there. So do whatever you do, have fun, be safe, and all that kind of stuff. All right, that is it for me. I will talk to you later. Bye.